Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we're going to continue from yesterday by looking at some of the wider markets, the HYG, the Dow Jones Index, and look at the effects that the CPI inflation figures from the USA had on the markets as well. I'll also have a look at the micro-analysis of the Bitcoin price and how it affected the Bitcoin price yesterday. But before I begin, the usual disclaimer, please remember all my videos are for educational purposes only. Nothing should be taken as financial advice. I don't have a crystal ball. I don't know what's going to happen tomorrow. So please do your wider research before making any investment decisions. So with that out of the way, let's get straight into it. I'm going to start off with the HYG. This is the junk bond market. And if you want to get this chart on your trading view, all you have to do is go in the left-hand corner here, type in HYG. Or if you go to the watch list and if you type in HYG and you'll get it here, iShares Box High Yield Corporate Bond ETF. So yesterday we had the CPI inflation figures from the USA, and these are the headline news on that. And that is that the inflation surged to 7.5% on an annual basis. And this was even more than expected and certainly the highest since 1982. So how did all this feed into the markets? That's what we want to have a look at. Please remember the junk bond market is the most sensitive market, or one of the most sensitive markets, and that's because it's the high yield corporate bond, which means that they're more riskier, and therefore if anything goes wrong in the wider markets, in the economy, these people are far more sensitive to that, and these are obviously the riskier assets, and if you're holding risky assets, you're more likely to do this. And that's get out of the market. And this is what happened yesterday. As you know, I've been drawing these two lines here. The first one was really to raise my awareness that this market is now coming to the downside, which is exactly what this did here, by warning us when we came to test it here, there, and there. And now it's falling below our critical levels of the support levels on the left-hand side, as you can see there. And this was at 83.7. And for the first time since September, we've closed below this line here. So this really raises the alarm bells for me. However, obviously, there are other levels before the market actually has a crash. But certainly, we should be aware that this could happen. Now, the other side, the positive side to that is that now that the inflation figures are out of the way, and we now expect anywhere between 1/4 and 0.5% interest rate rise in March, that's now baked into the price here. So that means that now this is reflecting that, and we may well have a post-figure bounce next week or even today. So we'll just have to wait and see, but this is what's happening in the wider markets. And if we have a look at the Dow Jones Index, this is what happened yesterday when the figures came out. We came down by around about 500 points. And the question is, will this trigger a fall to our critical level here at 33,000. So only time will tell, but certainly this is what's going on and we need to be aware what's happening. And everybody has to make up their own mind whether they want to be more invested or less invested, or more in cash or less in cash. And that will depend on your trading strategy, of course. And yesterday the dollar obviously went the other way. So will it now trigger a rise in the dollar for the next few days and weeks? Only time will tell, but we do have this resistance line here and we just need to monitor it. But certainly things are happening in the wider market that we just need to be aware of. And how did it affect Bitcoin? Well, this was the yesterday's candle here when the news came out. So obviously at the beginning, I think it went up quite a bit, but then reality set in and we found ourselves coming back down here, closing this candle at the 43,300 level, which is exactly where it's at the moment. And today's candle did hit 42,600, but buying came in here and pushed it all the way back to the 43,300. So we'll see how that develops, but certainly this is the effect yesterday's news has had on Bitcoin as well. So what we're really looking for is a sign to give us confidence. And as I've been saying over the last couple of weeks, since we made this bottom here at 32,900, with the rise in demand that we had along the way, with all of these quite bullish candles that we've analyzed since then, and we've taken some profits in this zone here at 44,500 to 45,500. My own perspective is that we need to capture this price level here at 46,000. So for me to re-enter the market, I need to either get above the $46,000 mark here or find support at these levels here at the 40,000, maybe 41,000. So this would obviously be a good place to buy, because you'd obviously get more units. But this place would give you more clarity that we're going to be going in the upward direction in comparison to this point here, because there would be a threat that we could go further down. So this is the risk-reward ratio you always have to weigh up and have to make a judgment on. Obviously, the best scenario would be if we could get above this level here at 52.53. If we could get above the $52,000 mark, then we could leave all this price action down here behind us. Then we would get more blue skies ahead. And this really would be the confirmation that we've now moved much more firmly in the upper direction. And currently on the candles side, the candlestick pattern side, what we could see here is that we had a big move up here on the 4th of February. We got an indecision candle here, and it would have been easy to form an evening star pattern here with a red candle, and that would have given me a trigger that this market was going to come much further down. Obviously, we got a green candle here, which paved the way for further increases up here. And this candle, this long-legged doji candle, or a spinning top, whichever one you want to call it, it's basically got a long wick at the top, long wick at the bottom, and it's basically saying buyers and sellers came in, both tried to push the market up and also down, and ended up around about the same place. So nobody won, so a huge amount of indecision. And we got another spinning top here, another indecision candle, and then we got a rejection of higher prices with this candle here. And when you get a candle like this at the top of a trend, what you need to do is to look, because this is a daily candle, you need to look in this candle, inside this candle on the shorter time frame, like the 4-hour, to see if there are other signs that this is going to go up or down. So if we have a look at that candle, this is what it showed us here. This is the formation with a 3-candle pattern of the evening star. And basically at the top of a trend, a big green candle followed by a small bodied candle in the middle, which then is followed by a bigger red candle, which is around about the 50% of the previous green candle here. That forms a pattern called the evening star. And as I've shown you with the definition, an evening star is usually found at the top of a trend and has a high bias towards the downside. It's bearish. That doesn't mean it's guaranteed. Please remember, as I keep mentioning, and sometimes I get comments, people saying, oh, you said this and it's done the opposite. I have to keep emphasizing these things are not certainties or guarantees. We are in a game of probabilities, and this is a high probability that we're going to come to the downside. There's no guarantee that it's going to come to the downside, but the high bias, the high probability is to the downside. And this is exactly what we've done. So this would have given us a signal that we're going to go further down. How far down, we won't know, but it would make sense, as I mentioned yesterday, that the 40K critical psychological level is down here at the $39,000-$40,000 mark. Then we've got this white line here, which is the CME futures gap, which I showed you yesterday. So it could possibly come down here. So this is where I'm really going to be dollar cost averaging in. This is where I'm hoping that the price will come back to. However, there is this $42,333 mark here, because if we look left, you can see this was the flash crash that we had at this level at 42,333 on the 4th of December. So really, these are the levels we've got as possibilities where it can come down to. And one of the measures that I do use, and it's not really in any classical book or anything like that as far as I've read, but it's just a guide that I use just to give my thought a structure of where it possibly could come down. And that is to measure this candle from the top of the wick to the bottom of the wick. And it's around about 5.5%. So from the bottom of the wick, if you measure it, 5.5% would take you down to around about this level here, about 40,900. So this is where the CME futures gap is. So this would be a very nice, comfortable position for the price to fall back down to. Only time will tell, and we'll see what happens. A quick look at the EMAs on the daily chart here on the 8, which is the green, 21, which is the yellow, and the 34 EMA, which is the white. And as you can see, in this downturn that we've got, this is the first time that we've closed well above the 34 EMA, the white line here. So this is looking quite bullish on this front, and we've had 7 closes above this line, and the current candle is finding support on the 8 EMA. And this is quite significant because it may well be that we bounce from this level, and we need to be aware of this. And on the simple moving averages on the daily chart, I always try to look at the 50 simple daily moving average here. And as you can see, once we fell below this line here, we haven't really come to test it at all until here, where we've now flipped it above. So this is really quite bullish, and we're coming back to retest the 50 moving average there. And as you can see, once we flip above it, then we do tend to get on a rally, and similarly here. So this may well be the prelude to higher prices, and we need to be aware of that. So this is where we are. We found the first port of resistance here. As I mentioned when we were down here, that this is the first line of resistance we're going to get. And we've come back up to that level and now finding a pullback here. We're waiting for a flipping, we're waiting for a recapture of the 46,000. That's what I'm waiting for there. Or a opportunity to buy back here at around about the $40,000 mark. Just to re-emphasize, this is not financial advice. This is just giving you my perspective of what I'm doing. And everybody's got to make up their own mind what they want to do according to their own trading and investment strategy. Okay, so we'll leave it there. Thank you once again for watching. Much appreciated. I hope you found value in this video. And if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.